Can you write off sales tax? It's a common question that I get, and the answer might actually surprise you. So in this video, I'll explain how sales tax deductions work, who qualifies for them, and how you can use them to reduce your taxable income. If you've ever wondered whether the sales tax you pay can help save you money during tax season, you're in the right place. But before we get started here, I want to let you know I'm not a tax professional, but I've been doing this with my small businesses for years, and I feel like I've been doing a good job. So let's dive in. Yes, you can actually write off sales tax, but there are some rules and limitations. The IRS allows taxpayers to deduct either state and local income taxes or state and local sales taxes, but not both. So if you live in a state with no income tax, the sales tax deduction is a great way to lower your taxable income. Hopefully that makes sense. So how does it work? You essentially have two different options. First, claim the general sales tax deduction. The IRS provides a standard estimate of sales tax deductions based on your income, location, and family size. This is the simpler option, as you don't need to keep track of every sales tax receipt, which is low-key a nightmare, if we're being honest, right? And then there's the second option, which is track your actual sales tax paid. If you've made big purchases during the year, like a car, boat, or major appliance, it might make more sense to track your actual sales tax expenses. This method requires you to keep detailed records of your receipts, but it could lead to a larger deduction. For example, let's paint this out a little bit here. Let's say you bought a car and paid $2,000 in sales tax. If you choose the actual expenses method, you can deduct that full $2,000 in addition to sales tax from your other purchases throughout the year. Now, keeping track of all those receipts can get overwhelming, but that's where QuickBooks can help. I personally use QuickBooks, and they make it easy to log your expenses, categorize them, and even generate reports for tax season. It can save you a lot of time and ensure you don't miss any deductions. It's what I personally use with all my businesses. I'll throw an affiliate link in the description. So, another important thing I want to talk about or to know is that sales tax deduction is an itemized deduction. This means you'll need to forego the standard deduction to claim it. Itemizing only makes sense if your total deductions like sales tax, mortgage interest, and charitable donations exceed the standard deduction. I'm hoping that makes sense and I phrased that right. So, for example, within the last couple years, the standard deduction for a single filer was around $13,000. If your itemized deductions, including sales tax, don't exceed that amount, it's better to just stick with the standard deduction. If you're unsure whether to itemize or take the standard deduction, tools like QuickBooks or a conversation with a tax professional can help you figure out which option saves you more money. So finally, I think we need to talk about timing. You can only deduct sales tax paid during the tax year. So keep that in mind when making major purchases. If you're planning to buy a car or like a big ticket item, consider the timing to maximize your deduction. So to recap this, yes, you can write off sales tax, but it depends on your state, your income, and whether itemizing makes sense for you. And again, keeping good records is essential if you're tracking actual sales tax paid. And if you want to make managing your finances easier, I highly recommend QuickBooks. It's what I personally use, guys. The link will be in the description. And if you guys have any further questions, hit me up in the comments. Without further ado, please like the video and subscribe, and check out this next video right here. I think this is going to be super entertaining and you will like it.